Hello and welcome back. It is great to be back. I was supposed to upload the weekly recap yesterday and do the questionnaire today, but due to some technical difficulties, I have a new computer, new mouse, new keyboard, new whole fucking thing. Had some technical difficulties, couldn't upload. So today I'll be doing the weekly recap, or it's actually a monthly recap now. The monthly recap and the questionnaire. But before I get into any of that, if you've watched a lot of videos, you know what I'm gonna say. If not, there will be a Discord linked in the description below. Nothing there is monetized, nothing is for sale. There are no courses, mentorships, affiliates, or anything else like prop trading. Unless if you have YouTube Premium, you might have noticed I'm not even running ads on the videos. It's essentially just a trading journal. So if you like this type of content, if you want a trading community, feel free to hop in. It'll be linked in the description below. So with that said, I'm gonna fuck myself off of full screen, get myself on little screen, so that we can get into stuff. I want to start on the questionnaire because that is due for today. So I have it open here. Open here. We're gonna start with this. Yeah, Sharker, what did you do to Timmy's name? Anyways, this is Timmy here. He says, "Hello, Professor Rune. Shake Rune. All right. I have a question regarding recent developments in the global economy. Now that the organization of the petroleum exporting countries may be affected by the UAE distancing itself from OPEC related influence, could this weaken the petrodollar system? If so, what impact might that have on traders and the financial markets?" So that's a really great question. To answer that question, I'm going to tell you or define what OPEC is. OPEC essentially, and let me check this on by the way, that it's that I don't have to re-record. Yeah, it's looking alright. I could turn it up a little bit like that. Perfect. Yeah. So OPEC is an oligopoly. An oligopoly is essentially monopolies together. That's what we'd call a oligopoly that controls the production and the price of oil for how much these countries can earn and how much they can produce and what prices they can set. So what happens now that UAE has left OPEC? That means that UAE, which this last decade or so has built or invested so much in expanding their production capabilities, will finally be able to meet their capabilities. They'll be able to export as much as they want as long as it's for above extraction price. They have a lot of money to probably make back the way they see it. And could this weaken the petrodollar system? No, I really doubt that because the UAE is a lot more aligned. It is probably the most US aligned state there is. It is them leaving OPEC is actually a turn to the United States. Their main importer is going to be the United States. So they're going to sell this in the dollar. So we're going to get that full petrodollar loop into the UAE. They're going to get looped into it like the Saudis, even though the Saudis are trying to get independence from the petrodollar system. They are independent, but and not in that sense. Or they are now. They started accepting in 2024 other currencies as well. But let's stick to OPEC here for a second. So since OPEC is an oligopoly, it's a cartel. The more people that leave that cartel, the less of an influence they have. Because countries can just keep selling, and when you have more and more players to import from, that'll sell for below OPEC set prices, it becomes more attractive to leave OPEC as well. So in a sense, the bigger it is, the less attractive it is to leave, and the smaller it is, the less power it holds in that same sense because they lose import, or I mean, sorry, they lose export ability. So no, it's not going to weaken the petrodollar system or anything like that. Let's go on to the next part here. If so, what impact might that have on traders and the financial markets? So in the long term here, if we see the same trend going on with the weakening of OPEC, I'm guessing the academic consensus will be that we could see a permanent lowering in oil prices. That could make oil easier to trade because oil at these current prices and is very hard to get ranging for. It can be quite annoying, to be honest. I mean, I'm gonna get to the weekly recap and show you I've made some really good money on oil, but shit, right now it's not the best, and it hasn't been for a while. We before the war we didn't trade it a lot either, quite rarely. As for the financial markets, since that could lead to a lowering of oil prices, especially if as it becomes more attractive to leave OPEC, and if anyone else leaves as well, that would be good for the world in the sense that I mean it depends who you ask, right? But in the sense that oil is cheaper, consumer prices would going down, CPI, easier to control, lower interest rate, blah blah blah, whatever, all that shit. That is not good for us traders. We thrive on volatility. Lower oil prices would make it a lot easier for countries to have a robust economy, especially when there's a surplus of it. Crisis like these, the one we're in right now, that might be coming to an end, hopefully, is less impactful. And we need volatility to get our BOs, CRs, continuations, all of that. If nothing happened in the world, we just have a flat market. There wouldn't be much to trade at all. So in that sense, it sucks, bro. It sucks. Yeah. But are you gonna notice it or anything right now? Nah, I wouldn't worry about it. And there's always some fuckery going around. So I don't think. I mean, we're having a fucking war right now, shit gapping and oil being untradeable. Yes, I wouldn't worry about that hugely. And this UAE leaving OPEC is a huge alignment to the United States. It's a huge alignment, which is quite strange. They might have been pressured. I haven't looked too much into it. I've only read the headline risk, or sorry, the headline. So we used to say headline risk when I'm talking about camera, but they've read. Sorry, I've only read the headline on it, so I can't really speak too much onto it. But it seems like they could have been pressured. So additionally, why has gold been declining in price recently, despite ongoing economic uncertainty? So gold has been declining simply because the Fed has decided not to cut rates due to the war in Iran. Because the rise in oil prices is a direct CPI, consumer price index, so it's inflationary. So the Fed hasn't been cutting interest rates, and when the Fed isn't cutting interest rates, historically, gold reacts negatively to that because other assets that are seen as safe havens like treasury yields, bonds, obligations, those types of holdings they can set and lock, give better returns, and it makes gold less attractive because it is a hedge. I mean, you can imagine it in an extreme sense. Let's say that, for example, the dollar had a 20% interest rate. People would want to hold the dollar if they want to, and they'd be a lot more inclined to hold the dollar than edge into gold or anything else for that matter. That's why usually, even though the market's at all-time highs right now, usually the markets and gold react negatively to it. But I mean, we can expect to see gold climb up again just due to the insane, intense, and increasing Chinese buying. Russia also did that before they started the war in Ukraine. They bought a bunch of gold, declared war, gold skyrocketed, sold that gold. It's a pretty clever move. But China is buying a bunch. They're hoarding all the world's gold. Sorry. So that's why it declined. I mean, you don't have to think about all the noise around it. Just keep in mind that if the Fed ain't cutting rates, gold's going down, bro. Yeah. So I hope that answers your questions. Again, if not, you can just hop in general and ask me. Another question from him. So let me remove all these, by the way. All reactions. This one I haven't even read. None of these I've read, actually. Shake Run. Why does he call me that? I have a question. Yeah, I had to copy this in for him because he was muted. I have a question regarding the JPY. Recently, JPY currency pairs have been experiencing significant volatility, and there are reports that Japan may be reducing its holdings of U.S. Treasury bonds. Could you explain how this could affect us traders, the broader economy, and why the JPY has been moving so sharp lately? Again, this comes to the interest rate decision not to cut interest rates, and they may be reducing holdings, but they're not a huge holder, and most likely U.S. citizens or China is going to buy that up. So, in a sense, that doesn't matter that much. The broader economy, not that much either. And JPY has also been holding interest rates. If I don't recall wrong. I believe that. Mm-hmm. Yeah, they used to be at zero, negative. Yeah, but finally they can raise rates. Imagine that, struggling with inflation. That's not a problem America could ever have. They would just go to war and print. Yeah, so they've decided to hold interest rates. That's why we've seen these huge movements in the JPY. I did finish out all those trades. All the BOs hit TP, and then they smashed down because of exactly what you're talking about. Let me find one of the big movers, like this one right here, for example. Cat JPY went up to TP, bang, smashed down. Yeah, so we can see that definitely had an effect. You can get less Canadian dollars now for the JPY because they're holding interest rates. But not, I mean, it's not Armageddon move. If it was like 5 of these and this was the candle, then I would be looking at it like, what the fuck? This, it's not too bad to me. Nothing is happening. All right. I would appreciate, yeah, for us traders. I mean, this is just the CR setting itself up, so not much of an effect. I would appreciate your insights on the relationship between Japan's treasury sales, currency market moves, and the potential impact on global financial markets. And I'm marked here. Yeah, another question from Timmy. So are you asking me what the relationship between Japanese treasury sales are on the global financial market, or the potential? Because I don't completely understand the question. Or is it related to what we read above, to the U.S. or whatever? Yeah, I think that's what he means. Japan's consumer potential financial markets. Okay, sure. So the relationship between treasury yields, currency market moves, and the potential. I, I'd appreciate if you could have. I should have read them and had this clarified. But anyways, when Japan sells off treasury yields, it doesn't not too much happens because Japan has such a huge fucking amount of treasury yields. Like the Japanese debt to GDP is fucking insane. I don't understand how they're not in a crisis. Look at this bullshit, bro. 252. They don't even know. Yeah, this is not. This is bullshit. This is also bullshit. It's like 300%. It's a bit higher than this. They just don't know how to quantify it because Japan separates it from their state level, so the all of Japan, and then regions set up debt and they take it from the federal government. So that regional debt doesn't always get counted. That's why it says the 232, 250. Fuck no, man. Anyways, it is pretty high, so that there's a lot of treasury yields they're holding and they're selling, and it doesn't really affect how the JPY moves on our time frame, on the 1 day, on the 12 hour. What it reacts on there if we are to go by macro effects is something like a holding of interest rates or even a hike of interest rates. So a hike of interest rates would strengthen the currency like it did now, or even just holding it because investors were probably, by the looks of that candle we saw, probably expecting a rate cut because traditionally they're at very, very low levels. Let's check Japanese inflation. Let's see why. I don't want to get some random website. So 1.8%. So yeah, so that would be indicative of cutting rates. Consumer is excluding fresh food. Why would you exclude that? So yeah, 1.2. This website doesn't seem to be that accurate. Trading economics. Isn't economics weird? You just go to different websites and find, and all of them will have different inflation rates for Japan, different debt to GDP, different everything. It's fucked. So they forecasted 1.7, and the actual was 1.8. So I mean, a rise. Can you call that a rise? I don't know. But them holding interest rates because of it rising, normal decision by the Fed. But if they were to hike it even more, for example, say if it keeps going up and they want to stay within the central bank's range or whatever, that would affect Japan negatively. The Japanese index, it would, the stock index here. I'm not talking about JP JPK or what it's called. The one I don't use in I don't use it in C Trader. I'm not interested in how the JPY is doing in general, but I mean it's gonna boost it the same way it does for every other economy. To be honest, it is gravitational for the stock market and the currency market. It strengthens the currency, and on global financial markets, I mean there isn't really anything to say on it. There isn't much that can be really said and that I can think of right now in terms of Japan. Also, keep in mind I'm not an expert on Japan at all. I am an economist. I have looked into Japan. I have studied Japan. I studied almost everywhere except like shitholes like Somalia or some bullshit like that. I have no idea what the fuck's going on there, or Tanzania. I don't know, no fucking clue. But they're not that much of a huge player. If you want to look at, I know you're pretty young to me, so think of it this way: they're not the main character. Okay, the United States is the main character. The United States, the global viewpoint is generally that the United States is the protagonist, and you've got China as the antagonist, sometimes Russia as the side antagonist. So when these three countries are doing something, that's much more likely to get a market reaction, while Japan here is what you would call then, so fucked up to say this, but a side character. I hope that makes sense for you, bro. A side character. So the effect on global financial markets, not too much, especially when we're looking at global, not much at all. All right, let's remove all these right here and give a thumbs up to eyes here. Well, I'm curious when you think it will be able to trade oil again. Also, for how long will gapping continue in regular markets? So this one question I did actually see, and I asked for clarification. Let me just get this down so I don't forget it. He was asking. He's asking specifically about gapping in. When he says regular markets, it's because he's in the Discord, so he means our regular markets, which is Forex. He's not asking about SPY. When is SPY going to stop gapping? No, it's never going to stop gapping because it closes every day. So fuck that. When we'll be able to trade oil again is when the Iran war ends. Till then, we don't know what the fuck is going to happen. So I'd rather stay the fuck out of it unless it prices it in and it starts ranging. But again, if the war ends, then there's going to be a huge fucking dump. But if we look at it here on Bloomberg, you can see, let's have a refresh. Trump rules state of Iran talks, says prefers not to strike. So it isn't covering the whole front page anymore. It isn't the talk of everything. Just like, for example, the Ukraine war, it used to be the focus of absolutely everything. I remember when it broke out, I was trading, the markets reacted. Anytime something happened there, the markets would react like, holy fuck, we're gonna die. It's the breadbasket of the fucking world. We're all dead. GG. A lot of panic and media making it seem really, really crazy, and now no one gives a shit. No one gives a shit. No market anywhere moves a pip because of what happens in Ukraine. So things get priced in and people get used to it. It's like that current thing syndrome. You know, people get tired of seeing it on the news. And Bloomberg knows that. Bloomberg's been around for a while. CNN knows that. MSNBC, or whatever all these fucks are called. CNN. Real incredible CNN. They know that, so they move on to other things eventually, and it gets priced in until it potentially ends. But the gapping now, I can see that going away. And that question actually, that's all I've got. If you got any other question, if you got anything else you want to know about it, just ping me and ask me, or you can. I have notifications on for the Discord, so you can just ask and I'll see it. You don't even have to ping me. But that ties nicely into the recap part of this month because we're on the monthly recap now. Let's see here. Yeah. So regarding that gapping you mentioned, going into let's get some charts open here. So going into this month, if we have the PR market here and a BO market on this side, I often use this illustration. The pendulum most likely now has swung more to an equilibrium instead of it just being a BO market, a clean BO market. I'm expecting. Sorry about that fucking chair. I need a new chair as well. So I'm or I don't know if the mic cuts it out, but it's very loud. But I'm expecting a return to a more CR friendly market, one that ranges a lot cleaner, not this fucking bullshit right here, gapping, and we had a gap recently as well, but you'd hop on, you need to hop on lower time frames to see, but it wasn't too bad. Also, this is completely invalid. What am I looking at? All of this needs to go. But yeah, I see things having the potential to get priced in a lot more. I think you guys in the Discord are gonna like the new market we're seeing now. I mean, not everyone. It depends what your trade. For example, like Conquest. I don't know his NQ shit. I don't. It doesn't matter for him. But I know for at least, for example, Ice Sharker, me, Timmy. That's the ones that are using the Forex strat with for swing trading. That'll be quite nice. And I know you guys prefer the CRs because those are very clean setups. Here I'm seeing this indecision candle, you know, it's typical CR like that. They're most likely going into next month. I'm quite excited for it. I can trade this month as well. Obviously, I didn't hit my multi cap on Friday. That would have been fucked up. My monthly max like that. These are a lot more dependable, easy, high win rate. You set them up properly, they do their thing, and they work. It's like fucking Honda, bro. But yeah, they're gonna. I'm expecting them to be a lot more viable this month than previous month. We're not gonna have a declaration of war, hopefully. If it happens, it happens. Not much to do. Everything will just go blow out of whack again. We'll catch some BLs. We'll see what happens. But most likely for this month here, I'm expecting a better, and when I say better, an easier market to trade for you guys. Even though I know you guys have been doing quite well, especially Chakra up 5%. Good job on that, bro. Ending the month at 5%. Sucks that you're in the EU though, so you don't have commission reduction, spread reduction, cashback, and all that shit. You would have been up a little bit more. Not much, but a little bit. Also, I brought this up right here. I fucking piece of shit. Can actually put it in trade talk as well. No, I'm gonna do it right now so I don't forget it. Also, I'm never in a hurry when I'm doing these monthly recaps. Pin it here. This is very good if you want to click out all noise. You don't want to see opinion pieces or anything related to that. Go on the side here though, go to options. It should look something like this when you first open the page. Click here, get rid of all this noise, and only look at high impact things. And look for ultra high impact. Look for example, Powell, Fed chair speaking, that kind of thing, especially in the dollar. So you can uncheck a lot of these pairs as well because it means fuck all, especially China. What the fuck? Like that. Just for the euro here, the unemployment, not too bad. So nothing too trade balance for the euro is interesting, but nothing too much coming up. This one here is quite interesting, quite easy to read. It gives you a lot of data here without all the noise. You don't have to read any. But this is quite different. This is straight fundamental reading compared to looking for basically what is the current thing when we're reading this, the current thing that is hyping or scaring people or whatever. Now, with that said, let's get into the results of the month. So, as for April, at the bottom here, down here, you see the bottom down here, April ended up 10.2%. Again, 10% is my monthly max. So as you can see, since I started recording till now, I'm up 220%, which is very nice. And you can see there was a huge jump here. This is way out of whack. It's because of that one fucking oil trade I did last month with 0.1% risk, and I just hit dynamic, let that shit go with each other until it clapped. And I went up 23.4%. Way out of bounds. So I couldn't trade last month. But yeah, this month ended up nicely. I'm expecting a cleaner month next month. We'll see about that though. May. Going into the summer, those are usually very slow months. So in June, July, August, those are slow as fuck. September and October are usually really good months. But yeah, the summer is very slow because it's vacation times, universal vacation time. Less people are trading, less institutional traders, and all that. But overall, we've seen very good results in the Discord as well. Besides Timmy, but I told him like when you're going off demo trading, you should expect to be red the first 6 months or so. Especially when you're making those dumbass fucking mistakes like thinking short means to buy instead of sell. Fuck. And then entering shit in the wrong direction, and yeah. Bro, without bankroll management, your account would have been gone, bro. That shit would have been dust. But everyone has to start somewhere. So that's all right. Also, regarding HyperX, that's something I talked about quite a lot. It might sound strange to say this, but I'm glad this happened. It's the right one. What's this? What the fuck? I just need to find the profiles. I should have had them open from the get-go. I think this is the one. Yeah. So this was the 500K, but it's a $1 million challenge, turning $100,000, as you can see here, into $1 million. So what happened here was the first month was all right, had a little pull down, whatever, and then I rage quit because of the tax withholdings. When the month ended, I got fucked, and I found a way to get lower taxes, and we started up going here. And as you can see, this is the HyperX profile I talked about. That fucking crashed right down to BE. You can even see I took a little loss. So even though these hyper aggressive profiles usually last for 6 months, you can see here, this one only lasted for 2 months. So I went from $193 down to $135,000. Swoosh. That's what happens. And I'm glad that happened because with Timmy running the TikTok, I don't have TikTok or anything like that. So whatever happens there is him. But him running that and getting a lot of people into the Discord from TikTok, the average age is going to be pretty low. People are 16, 17, 18 when they're joining, very, very, very young. Teenagers, and they have this fucked up perception from TikTok, these course sellers, these motherfuckers that, oh, 50% a month. That isn't even a lot, bro. I saw this dude on TikTok do 600% a day. Yeah. Get the fuck out of here. And you guys in Discord, you know what I'm talking about. You're talking about 600% a day. Complete. I was gonna say completely idiotic, but it's not even that. You've lost touch with the reality. If you're being realistic, doing 3.5% a month is absolutely great. If you're doing that, you're doing fantastic. You're a profitable trader. You're beating essentially every index on earth. You're beating all the mutual funds, of course, they suck. You're beating equity funds, hedge funds. You're beating everyone. You're beating Warren Buffett. You're one of the best in the world. It's that fucking simple. So I'm glad this happened. You can see what happened. happens to me, which is was quite young as well, just 16 years old, asked me why I don't just keep all my money in HyperX because he saw it go up so much. This is why to me, because what if this had happened the first day? I wouldn't have been able to get it to be. I would have lost my account. I would have lost my whole net worth. Just that would have been gone. That's why I only put $100,000, just this tiny, tiny, tiny play money amount in. And it had to be enough to make people notice, but not enough to bother me if I lost it. So now you can see why. Also, but again, we did replace HyperX. I call it Rage Quit here, as you can see. I'm going to leave this open just for transparency's sake. You can see someone appreciating it as well. But yeah, I started a new one here. I did deposit $140,000. But then I was like, fuck that. I'm taking 10K out because I don't want to start with a bigger amount for no reason. I mean, I was at 135. So why would I put 140? Doesn't make sense. So took out 10 back to 130. And here, this is called Rune X. We did it like good hedge fund people. We erased HyperX from the existence of Earth. It had never happened. I'm going to start a new profile again. That's how it goes. And people are fucking degenerates. They love this shit. And again, here, I'm going to try to push it up to $1 million before withdrawing that. We'll see how that goes. In the previous profile, we didn't implement the HyperX. We were running the Wriggle profile. If you don't know what that is, it's another super aggressive fucking piece of shit that can crash in my fund. Talked about it before even though. It's not as bad as this one. Wriggle X can run for like 30 months before it crashes. That's what it averages. But we didn't finish the profile on this one till April 19th. So we were basically back testing it when we were running it, and we found a fuck ton of fallacies and shit afterwards. So we're in this, yeah. So you can see it kicked off April 19th. Really kicked off. Before that, it was a shit. It's a very strong profile, and we're gonna start running that from the beginning here when we start on Rune X. We're gonna be doing these numbers. Not this flash here. We were back testing, and also the reason for the crash and underlying other issues we found in the back test have been cleaned up. The back test. This is the back test. It's my money. The back test. Yeah, we're gonna, or we have cleaned all that up, and the profile is ready to run. So it's gonna be very interesting to see how it does now. I've set milestones at 300K. That was not too hard. 500K and then million. And we'll see where it goes from there. So it'll be quite interesting. And also, again, we've got the tax reduction with withholdings being 20% instead of being 30. See, that's the pains of being an institutional trader. You can't just fucking fuck off these taxes like you guys can. You guys are trading. You don't even have to pay unless you're making a ton of money. But by that point, you move. And a lot of European countries, like Norway, have wealth taxes as well. You don't really have to indulge in that. With that said, I think that wraps up the monthly recap. I think that was everything. Am I forgetting anything? No, I don't think so. So with that said, thank you for watching this monthly recap. Let me give myself full screen. Monthly recap with the questionnaire answered. If you liked the video, again, my Discord will be linked in the description below. Feel free to hop in and check it out. If you don't like it, you can leave as well. With that said, I'm going to end it right here, and I hope to see you soon. Thank you, and bye-bye.